let me see. I'm going to start with like some great news. So many people believe that, and it happens all the time, many people believe that Coliving is something small or the Coliving is something like really, really new. And in the rest of the world, we are so far behind. In India right now, they are expect to reach 1 million beds for co-living by 2030. 1 million beds. How many co-living beds do you think we have here in the United States? If we have 100,000 beds officially in co-living, would be too much, I think. We might be close to that number, officially and unofficially, but India has 10 times that capacity with serious invested money. I'm not saying mom and pop shows are not valid. What I'm saying is the co-living sector worldwide is growing significantly, way more, and is way more sophisticated than it has been able to be here in the United States. So the fact that you are here today in this beautiful Friday trying to learn more about co-living, you are already ahead of the game. So that's the good news. You already are ahead of the game. Companies as serious as Colliers, very serious, very large commercial real estate investors are building, creating communities across the world related to co-living in a way more sophisticated. Someday we like go and check how they do it over there. But now our mission here is to educate and to learn and to work very clearly to increase the inventory of affordable housing in the United States. Again, companies as big as Colliers are trying to go as for 1 million beds in India, in that population. And what happened also in India, and it's also a nation, a global situation, is growth of people, growth of population, and the economy factors such as salaries not going as long as with the economy, construction cost not in the same size or in the same level as the value of the homes. That's a different conversation. Increase of lack of density, of lack of space to build bigger places in where the jobs are, So that's also another one of the factors that Coliving plays in hand. And in places like Asia, this is where we are right now. And there is a lot of more oh, perfect. Look at this. Trends in Indian co-living. The demand now in 2020, 5.8 million beds. In 2025, 6.6 million. 2027 forecast, 7.4. By 2030, 9.1. So that's the demand, that's the stock, and we don't have enough stock. You see here, right now in 2025, the demand is 6.6 million beds, and we have 0.3 million beds officially. The market penetration is similar as here, so 5%, even less. So, and the market size is very big. So, and this is important for everybody when we're thinking and we're selecting a place to build your co-living property, right? Do we have enough people there to satisfy? The fact that you find a house or that you find a property for co-living, if you don't have enough market demand, then who's gonna go? If it's in the middle of the desert, or it's fantastic, it's right in my back alley, in my back door, but there is only 3,000 potential customers, and they might go somewhere else, or they have another solution, then what do you do? Always try to find areas where you have 10, 20, 30%, even more potential demand that you are for sure gonna get filled. And that is, and again, we know about rental arbitrage and other data here, and now they have in this article also we talk about traditional renta, but also where the demand is versus how many one bedrooms there are and what is the potential. So there are different models, same that we discussed before, the lease and sublease, the share revenue, franchises already. Imagine we don't even have franchises here for co-living. So what that gives us here is a really good idea in how they started not only penetration but also market size, right? So that is really important. What is the market size that I'm taking care of? And that's where Janice's story is so interesting. We're gonna go into you, Janice, in a little bit. So not only welcome everybody, welcome if you're new here. My name is Clara Arroyave. I'm one of the top leaders, if you will, in the co-living sector. I'm gonna share my screen again. Hold on, this is not the one. A little bit about me. I'm been in co-living, how long ago? Let me see, how long ago I've been in co-living? 2018, yeah, share this one. I've been in Coliving since 2016. Wow, that's a long time. Yes, my first Coliving company was in 2016. And I always begin all my classes, all my trainings, and please write this down really, really well. You cannot build, you cannot work in Coliving, you cannot create or think about Coliving in your future as an asset class, as an investor, as an owner, as a host, if you don't fulfill the 3 C's of Coliving. What are the 3 C's of Coliving? They are layered right here. It's cost, community of convenience. When you find a property, when you think a property is going to work, think about what is the cost, not only for you financially, but is the cost that you're going to offer to your clients, right? And this is a back and forth conversation I have many times with many people, and after a lot of time, and for finally people are understanding, owners and investors are understanding that co-living without community is not sustainable. Because one of the problems that co-living solves is loneliness. Sorry. What do I mean by loneliness? The share of households of one in the United States is higher than you think. It's more than 30%. All people that live by themselves, they have no friends, they have no family nearby, they're alone. They're alone. Once you have a nice co-living property, once you offer some community, some shared area, some shared space, they start to get along with each other. They start to have breakfast together or whatever it is, and that enhances not only their quality of life but also the quality and the term and the length of their stay. And there is enough data to prove this worldwide, but also in the United States as well. The third aspect of co-living, the 3 C of co-living, is convenience. What is convenience? As much facilities as possible, or as much convenience in the service that the laundry doesn't have, for example, a coin-operated laundry, but it's right there. Or that you provide a service, once in a while you provide the cleaning products for them to take care of the house. Make your facility, make your property as convenient as possible. Once you fulfill the 3 C's of co-living, you will have a property that will take care of you as well, right? And I love this quote, and it's a conversation I have also many times. Don't treat people as dollar signs. Oh, nurses are profitable. Please don't don't speak like that, because these are human beings. Independent of how much they make, where are they coming from, what do they do, treat people as your customers, your client, not necessarily as dollar signs. When you have just a place that is full of beds with no quality, no convenience, no community, you get what you pay for, and you might not have the best experience or the best clients, and then that's what happened with your product, right? So please don't be that person. Again, this is me about 40 pounds ago, 2016, with my first, 17, I think, with my first co-living company, Place Me, which it was a co-living arbitrage company. If you know what co-living arbitrage is, lease and then sublease. So I always put the example of the Oreo cookie. So you lease a property, the layer of the Oreo cookie, you put the layer of community and convenience, right? And you put the price on top to buy it from the market. And I offer flexible accommodations across Cambridge, Boston, Alston, until about 2019, 2020. By then, I was able to have a beautiful team, about 7 employees, one business partner, about 15, 16 subcontractors. I was not only able to grow the company with very little funding to $42 million of assets under management. I was able to also acquire the portfolio of a competitor of mine that couldn't move forward. And then what happened in 2020? We all know what happened in 2020. COVID came. And with COVID came, how can I explain? Everybody went home. What is your definition of home? Can anybody tell me the definition of home? Home is where your family is, where your loved ones are, or is the place that you no longer need to be, is where you go to your roots. So I have to restructure the portfolio the structure the portfolio of my company, negotiate with a competitor. In this case, it was called a split spot, and I was able to return some money to my investors. And then Clara went straight to the unemployment office, start from scratch. And here I am. So, long story, 2025, we're now 24, 25. Now I'm one of the most sought after speakers on the Coliving sector. I'm here in the National Coliving Conference where I met many of you, next to Sam Weger, to Gary, to Mario, excellent Coliving operators. And if you are in the Atlanta area, or you can go to Atlanta, especially, but in this case, you need to be in the feminine gender, I'm going to be one of the speakers in the first Coliving Women's Summit in Atlanta, October 17 and 18. And I think also they have a virtual ticket. And the link is like right here. If you use my name as promo code, I think you get about $50 off, which is like, if you can help, you can help. Okay, so now let's talk about what you want to know, which is how much money my property can make. And I want to talk about Janice, one of my starter students here in the accelerator, and her story and how amazing we were able to get a property that she found from that she brought to our class. We were able to underwrite and solve the majority of her problems in how to structure not only the finances, how to find the partners for that finances, and even how to get the property pretty much with zero money down. I don't know if Janice, you want to talk about, or you want me to run the numbers for you with us today. Let me know what you want to do.
You can run the numbers.
Okay. All right, let's do that. The fantastic numbers, by the way. It's one of the few properties I've seen that is able to make $6,000 in one property. Okay, so Taylor, South Carolina, right?
Yes.
Okay. Taylor's, there you go. So you put the property here, Taylor's, comma, boom, at the end. Okay, so number one, and let's go back to the beginning of my conversation. Taylor, South Carolina has over $200,000 people household, and 30% of them are rent. That's 60,000 potential renters. How many of them are households of one? We don't know. That's a great question. If there are households of 160,000 and you have 13 rooms in that zip code that is a small county, you have a good percentage of renters because there is not a lot of houses that offer this based on the market, correct? And if minimum wage is $7, right, and a studio is $1,100, correct? So to approve a studio, to be approved to rent a studio, you need to be making $40,000 a year. And a lot of people that make $7 an hour cannot qualify to make $40,000 a year. So that's where our calculator offers a suggested room price of $700 a month, right? So with that said, what is the price of the property that you have here? $487?
$4,875.
Fantastic. Perfect. And closing costs were about, you say 12 or more than that?
I said 7,500.
Yes, correct. And down payment was at 20, no?
Yes.
All right. And mortgage is 7.2, right?
7.25, yes.
Okay. And annual growth rate 3%, taxes are like 26?
No, taxes were 10,650.
Okay. Perfect.
At least that's the estimate on the tax rate.
Okay. 10,650. Perfect. And insurance, you remember?
Let me think for a second. 260. I think I might have had it at 300 a month, but do 260 a month. It should be less.
Oh, like a 24 or 2,500.
Yeah.
Yeah, about that. All right. And you need about 3 months, right?
Yes.
And your renovation is about $100,000.
Yes.
Pam, pam, pam. Perfect. And furniture, 20K, right?
I did 40 for furnishings.
Oh my
However,
God.
that's probably going to be less. I think it had refrigerators and stuff.
Yeah, that's correct.
Yeah. So, but put 40.
And 40. Okay, 40. And you have 13 rooms and average $1,000.
Yes.
And rent there.
Oh, they're not all 1,000. I think we did an estimate on 1,000.
Yes. You want to do?
Yeah, that'll be fine. I think that's what we did.
Or do you
That's
want to do average of 975? Whatever you want.
no, we did it. We averaged it on 1,000 the other day, I think.
Okay. Okay, great. Let's go. So, and you did vacancy 10%. And expenses, yeah, vacancy 10% and $600 in, I believe, it's 600 in utilities, correct? No more than that.
Right. No, that's about right.
No, because it's at 75 times. Hold on. Am I checking the right calculator? Am I checking the screen on the calculator? Yes. Okay. Making sure that I'm checking the right one. Okay. Yes, check.
What
Okay.
did you have there for
Okay.
utilities?
Utilities is like it's 75 times 13, no?
Okay, that's fine.
Um, can someone in the comments tell me how much is 75 times 13? And then utilities.
It's 975, but it's not going to be that much.
Okay.
I'm
That's
basing
correct.
it on my co-living property now. I have 8, so yeah.
Okay,
600 actually would be pretty close, or do it at 700 if you want.
Okay. And you will have no property manager, just you pay $1,000. So I'm gonna put 0.
I'm just going to do a flat 1,000 for
That's amazing. Good for you.
company, yeah.
Yeah, good for you. Okay. So and 5% in the regular. 0 because you will manage in this case.
There won't be any pad split.
Correct. Correct. And then show returns, calculate returns. Wow, look at this. So let me see if I can put this a little bigger for everybody to see. Can you see this? This is what we got. So 62% annual return on investment, cash on cash 5%, cap rate of 20, net income 97,000, and after you pay the mortgage, you have annual net income of 66,000. Why is that beautiful number so big? Because A, you really have a very nice cash flow. You still have to find out how you're gonna pay for the how you're going to incorporate the payment of the furniture and the payment of the renovation, how you're going to use it, right? And that will come from annual income or for equity from the property compared to that same house that will rent on the market for that $2,300. And if the house is, because that's the price of the houses and a rental in Taylor, South Carolina. And that will be a return on investment of 2.2 minus 2.2. So you will be losing $25,000 a year. You will use the same investment for that single family home. What do you think? Do you have any comments, Janice?
Is it saying the cash on cash is 5%?
5.7. Yeah, I don't know why. I
Yeah,
think
that's not right.
yeah,
It's a
maybe.
lot higher than that. So I actually did it the other day,
Uh-huh.
actually a couple of times, and really tweaked it like really in great detail. So my cash flow in the every month is, projected 6,000 for cash
Yeah.
flow.
Oh, yeah, no, here, this is the cash
Um,
on cash. This is the annual net income. This
right.
is the cash.
My cash on cash was a lot more than that.
Yeah,
I want to say it was 17 for
yeah.
cash on cash.
Divided by total cash invested. Maybe it's because you invested more in furniture. You have 40 in furniture. Let's put 30.
I had 37 at
Okay.
one point, then I had 40, switched it to 37.
I'm gonna put 30 here, just
Trying to
for
think what's
curiosity.
different.
Cleaning, 3,000 renovation, and oh, maybe you have way. No, that's me. You have way too much renovation cost. Let's see now. Yeah, it was me. The renovation cost.
Okay, yeah, that's a lot better.
Yes, I put an extra
Lot
zero on the
better.
renovation cost. Yeah, apologies. There you go. Nice. Congrats.
Yeah.
Phenomenal. Does anybody here have any questions so far, or they have another property they would like me to review? And Janice, were you able to find the last piece of the puzzle? Because we were able to help you. Hi, Emmanuel, welcome back. Were you able to find the last piece of the puzzle, which is the loan originator?
I ended up becoming the last piece of the puzzle.
No way. That's
No, I
fantastic.
did.
Okay.
So it was just taking me a little bit longer to get with whoever I needed to get with.
Okay.
And in the meantime, I'd spoken with a lender and they said they had no problem with the things that the other company
Mhm.
denied me for. So I realized through this that all lenders are not created equal.
Yeah, that's the thing.
So it's really taught me that I really need to, I'm going to start just checking out all kind of lenders and seeing what they have to offer. And I actually, through this lender, she also has a DSCR lender that, when they're basing it on single family rent, they will actually come down to 0.75 instead of 1 point something for the
Excellent.
rent. So I'm like, wow. It's because
Okay.
he really wants to work with co-living investors.
Well, that's something that we notice,
So
no?
I'm going to keep that in mind too. So
Correct.
that's
We are
phenomenal.
noticing, thank you, Janice. We are noticing a significant increase on lender interest regarding co-living properties, and that's fantastic for the market. Emmanuel, now to your question. Go ahead. You
Yes,
cannot mute
ma'am.
yourself. Hi, how are you?
Good afternoon. How you doing?
Great, how are you? What's your question?
My question is, it's kind of a loaded question, but how many units was this particular asset class? And then what do we do about co-living during this government shutdown? I know it's probably just temporary, but um, do we just
Absolutely. Of
keep on rolling? Because I and
course.
one last thing is, what do we have to pay? Like once we sign up for your mentorship, like
Mm-hmm.
what do we have to pay for? I remember you telling me just the
All right.
closing costs.
But we're
Mm.
talking about the deal now. So let's
Okay,
offer
okay,
let's offer
okay.
the part of the deal, and then we discuss that later. But that's perfectly fine. I can lower your hand now. Two things. A, this property is really big. The one that she has here is about 3,200 square feet. So it's very large, and it has two apartments on the one apartment, two in the back. So she was able to have about 13 units total. Is that right, Janice? 1-3.
Yeah, it's got a 1 bedroom apartment over
Correct. So that's
attached
part of
to
the
'em.
whole co-living part. So 13, 1 bedroom apartment. So 12 in the whole house plus one, so the 13 bedroom. All right. So that's why the cash flow is so fantastic. One is complete. So about government shutdown, that's like it's impossible to predict what's going to happen with the government. Correct? Like we only have one way that's forward. But also we know something, and is that co-living, this particular type of asset class, the way it is designed, is for the lower or the people that can pay the less money than a studio, correct? Less money than a studio that make minimum wage. The jobs that are minimum wage are not necessarily dependent on the government. Am I correct? You're still a cashier in the supermarket. You still deliver for Uber. Your clients might be still, delivering for Amazon. Anything else that you might think. That's so. No matter what, you're not selling co-living, you're not selling luxury units that might be independent, fluctuation of the market. When you sell a, a product that is for the lower end of the market, the people that cannot even qualify for a complete studio, 1 bedroom apartment for themselves, it's very simple. They just have no place to go. And even with an stress on the market, like the government shutdown, it still is the lowest rent that they will get and in a quality living setting. Does that make sense? I think it does make sense. Because then when you divide, $1,000, $1,000 or even less, we have clients that have rooms at $900, $800 per month. So when you have $200 a week per rent, the likelihood that whatever you make is you will be able to, and that rent also covers your utilities, right? Your all electricity, internet. The likelihood that you have to stay there is higher than if you have a place that you cannot afford and you have to pay or 2, 3 jobs to cover that rent. Am I right? So that's why it's like one of the co-living is one of the most resistant asset classes in the market. Okay. Is before we move, we're at the middle of the class. If there is anybody that has another property that like to be underwrite, we can talk about it. And also we can talk about why many co-living investors have a lot of barriers with their first property and the shiny object syndrome. Okay, does someone have a new property that they wanted to look at the numbers at while we have the calculator going? Um,
Yes, I have one in the chat.
Oh, okay. Can you put in the address? Let me see the chat. I don't have the chat open. Oh, chat. Let me see. Or okay. Is this one? Does Google? What is the address?
This one is it's 4934 Rockbridge Road.
Hold on. All right, let's open. 4944.
4934 Rockbridge Road.
Stone Mountain. This one.
Stone Mountain, Georgia.
There you go. Oh, wow, this is big. Perfect. All right. Can you see my screen?
Yes.
Awesome. All right, perfect. Okay, 355, 9-bedroom, 3-bathroom. So it's already designed for co-living, it seems.
It's already a co-living property.
Oh, is it active?
Mm-hmm.
Oh, okay, that's great. And why are they selling? Do you know?
I don't know. Sometimes he puts it in, the owner had the property surveyed for, oh wait, no.
Oh,
I
it's
don't know.
very
I don't
pretty.
know for this one.
It is very pretty. This is a stage. So it's 9 bedrooms. So see, this is what I look for, quality and convenience. Like this is not a close that I will offer, you know, but that's just a side comment on my end. Okay, very nice. Nice, clean, washer and dryer. Nice backyard, nice patio. Spectacular. Very nice. 9 bedrooms, 3 bathrooms. Bedroom, closet, kitchen, common area. 1, 2, 1, 2, 3, 4. Closet. Nice, it's nice. And it seems to be a large common area, so it's nice. Okay. And what are the rents, do you know?
Nope.
Okay, well, figure it out. Stone Mountain, 30088 355. You're gone. Okay, great. So in Stone Mountain, we have about, in that particular county, we have about 25,000 households. And 20% are renters. That's a big number. It's like more than 10,000, over 10,000, I believe. No, little less than 10,000, my bad. And again, the same minimum wage. This number here is wrong. I'm gonna take my data person to fix it. Market prices fixes prices about 600 for a room. I think it's a little low. And I'm gonna see what's running here, but I'll check with my data person to fix this part. 355. Okay, let's go up. And what is
This
the offer?
this property is like Stone Mountain is just a little bit outside of Atlanta.
Yeah.
So it says 25, but it's going to operate bigger because it's close to
Already done?
something so big. Yeah.
Hold on. Let me see what's going on in the property on the back end with connected investors.
Okay.
So remember, if you have a connected investor account, yeah, and if you're in my class, you pay for free 7 days, which is fantastic. And to 2,500, 2,500 skip tracing. So that's what we're gonna find out here. What's going on? 4934 Rockbridge. Let's go. Don't you love this? There you go. My list. Find deals. Right. For me.
So I actually signed up for Connected Investor for the free trial, and it has been very helpful.
Good, I'm glad. You're gone. Okay, last sold 300 vacant or unoccupied out of a state owner. So it's an investor with high equity. So you might be able to offer a little bit less than asking. But other than that, it has interior for 6 room, 3 bedrooms. He just put 3 more in there, 2,000 square feet. That's a good size. There is no liens or anything in the property based on what we have here. Okay, just out of state owner high equity. That gives you a good estimate. All right, let's go back. Closing costs, you have idea on closing cost?
No, this one just came to me. So we're doing
Okay.
this together from this morning.
Okay, got you. All right.
Yeah.
So, no, it's all good. So 355, perfect. So I will say 345. And perfect. And little bit property taxes. Let's put 3,000 here for argument's sake. And good. And how many rooms are we? 9?
Mm-hmm.
Oh, not 49, look, 9.
I mean, that would be
I
some
know,
great
right?
numbers right there.
I know. And average price per room, what do you know in the market?
So I think it's 160.
Mm-hmm. Well, let's
per-
check. There are two ways to check, but also you need to check competition. So there are two ways to check competition. One, if you go to pass split, because this is a pass split property, and in the host side, you go in the host side, and so do you dashboard, and you do resources, and use explore maps. So you need how Stone Mountain. You see how many people are there, how many rooms are there, and what the prices. In Stone Mountain, Georgia, let me see. There is not a particular zip code for Stone Mountain because it's just right here. It's part of Atlanta. So because part of Atlanta, you have in Atlanta, Pasplit is a powerhouse. So 8,000 units, and the demand people in a month look for rooms 40,000 times in Google. So that's great. And the price with private bathroom is 264 and shared bathroom is 177 with 83% average occupancy, 9 days to first book, 35 days. So you have a high percentage of occupancy, right? And knowing this price average per week, I would say about $700, $750 per room, right? Something like that. What was it? $750. That's a fair number. Do you think that's a fair number? And what we can do is just do like this, and for rent, look at the comps, and then on time, not time, room. Go back to room. So always look for the comps. Sorry. Look for the comps in rooms as well. Let me put this a little less. We all can see what is I'm doing. So look at the comps in your area. Jesus. Hold on. There you go, a little smaller.
So up to $200.
No, that's my bias because I'm typing too fast.
Oh,
Because it doesn't wanna up to all right.
okay.
Better, right? Those are your comps. On type room, there is nothing. All right, now we can see. There you go. So here you have Stone Mountain. Ah, Jesus. Sorry, girl. So you can see that in Stone Mountain, Jesus, I'm gonna go back. I mean, Atlanta is filled with Coliving units, which is great. And I cannot seem to have fun with my mouse again. Okay, I just don't want to get more distracted and go back to about 700 in room 750. Let's check what the numbers are with that, shall we? Like these are here, 750. Yeah, that's fair. And 10% vacancy, will you do pass split? So that's 12, right?
Well, I think they said it was 16% because of the property management and
Yeah.
pad split.
Okay, sure. 10 vacancy, 10%, 9 times 75 is like 600 right here. All right, everything the rest is the same. Calculate, show. Okay, there you go. Here you have, and this is easy to see, this is easy to check. 16% investment on return on your investment, 5%. Wait, I have a lot of money in your repairs. You need 0 repairs because it's already active, and you need no renovation. Correct, and no utilities while vacant, and no furniture cost because it's already active. Correct.
Mm-hmm. Yeah.
That's the good thing. Okay, now we're looking so much different, so much better. And return on investment 16%, cash on cash of 16, a cap rate of 10%. That's really good. That's really good. I'm assuming you only put in 20% in this property, correct?
Yeah.
Okay.
You would put, I'm gonna take a picture.
NOI of 35, and you will have a check of $1,000 after that every month. Let's Recalculate, return, calculate. Yes, that's where we are. With a 20% down. Juan, I
With-
put 7.5% interest. I'm with 775, 3% annual growth rate, $3,000 property taxes, and $2,500 insurance. And if you offer 345, the way that it is, and that is 750. What happened in the rent is $800 per room. Look at what happened here. If the rent is $800 per room, and I know this is all variables, with 10% vacancy, we are looking at 19% return on investment, almost 20 cash on cash, cap rate of 11, and $15,000 in net income,
Mm.
which is very nice compared to losing $9,000 in a single family home, in this case in
Mhm.
Atlanta. So do you have any
Mhm.
questions? Is that all clear?
Okay, you said that you had a connection with getting
Yeah.
that rate.
Yeah, but yeah, absolutely. That's over email. Let's do that over email. Yeah, absolutely. Happy to help you. Okay, fantastic. Remember, this is live on YouTube and Facebook. So I'm happy to help you with the introductions to lenders as well. I think that we have a lender in the comments as well. If one is in the comment, please put your information down. Okay, so that's how you context and study if you have enough competition, if you have enough market, and if you have enough demand for a co-living property where you want to be, that you want to either delegate the marketing, and if you delegate the marketing, the numbers still work or not. What happens if you have someone there that doesn't work with past clear, charges only, let's say, 8%? How does that look? Calculate, return, show. See? Then you double your net income. If you have someone local doing this for you. Nothing wrong about past split. It's just showing you where the expenses are in your cash flow and in your cash flow, and how management your property, being involved in your property, really change the size of your check. This is where the 85% management fee. If you delegate 100%, then you delegate everything to a third party, and you have a 16%. I see people that have liquid in 20, and okay, you delegate, but you pay for that delegation, and that's when your checks change from double, from a net income of 38 to like where we're looking before 25,000.
Mhm.
So for you to be clear on this. All right, nice. And this is what happened. It happens many, many times. It's like, okay, how do I go? How could I get started? Is it is it a great investment if I put only, $70,000 down and without pretty much anything else, I buy a machine that, gives me the check a month. So that's give you little less potential for error because the property is already there. I think you have a question. Go ahead with your question before I start with closing part.
Yes, hi. How you doing, Clara?
Good, how are you?
Am I coming through clearly?
Yes, go ahead.
Okay, all right. Couple of questions. Now that co-living is becoming more acceptable around the country, and we have lenders, as I've heard you say, that are now willing to fund co-living houses. Do you think that they will begin to you know how in commercial properties the valuation is dependent. They use cash flow, I believe, to evaluate properties based on how much money is pulling in.
Yes. Yeah, correct.
Do you think that okay, like that example you emailed yesterday or today
Yeah.
about someone making 3 times more than they usually on a single family house?
Yep.
Do you think there'll be a point where where we can have that advantage of our evaluation being based on the cash flow instead of comps?
Let me tell you something. It's already happening.
It is?
Yeah, it's already happening. Not in Massachusetts, not in this neck of the woods, but I know for a fact that certain houses that are doubling, tripling the cash flow have a little higher valuation when it's time for sales in Texas in particular. How do I know? Because I have a friend that is already selling them. That they built single family homes, 5-bedroom, 1-bathroom, 5-bedroom, 1-bathroom, and the cash flow is so high that the market price of that property is just not the comparable of a single family. It's the comparable of an investment property that is helping affordable housing, right? With quality, with convenience, and it is already happening. Not at a biggest level, not at a biggest level. This is still niche. And that's where you're here because you want to learn how to take advantage and how to help increase that inventory of affordable housing and capitalizing this niche and help more people. And so the earlier you do it, the earlier you can have, get a better valuation and if you invest wisely. That's why I really worry every time that people come here and it's like, look, this mortgage, whatever amount is going to be your mortgage right here, you are the one that's responsible for that mortgage. I want you to be able to sleep at night, to be calm, to like, you know what, I have no cash flow that no matter what is, everything is going to be fine. My costs are taken care of because I have enough cushion to be able to have a property, not only that is good, that is well done, that follows the 3 Cs, right? As every Coliving property, but also that you have a good network of support and that you don't get distracted by what I usually call shiny object syndrome. Hey, should I put AI? Should I put that technology? Should I put core? So many things in the investment world that are like always going, and it's mind blowing in many ways. How many ways all the ways that you can get
Go ahead.
distracted. Yeah. So, Joshua, you have a question? Yeah, go ahead.
Yeah, I have a question about the market data analytics. So yeah, the market is more important than the property, in my opinion. It's the driver and its proximity to the population where it's
Yeah.
dense and they're looking for that type of demand. So you're able to assess demand with this back end tool, and then you
Yes.
did two manual checks, right? One in pad split, which was kind of aggregated. For the example that Bree gave, I would want to see what's in a 5 mile radius. Like, what's her unique competition as opposed to the entirety of Atlanta, because she won't, I mean, that property just won't be in competition with all of Atlanta. So
Correct.
where do you, I usually just pull up Zillow like you did, right? Look at what the room rental rates are,
Yeah.
and those are the true numbers because that's what the
Correct.
market is telling you.
Yeah.
But
Correct.
I'm interested in your back end calculations for each
Sure.
market. How is that determined? Like if we go to the Stonehaven market
Mhm.
that you have up, um, yeah, I
You want
saw.
me to give you? So you want me to give you my secret sauce, like right here?
No. No. Hey, if you pull it up, I'll show you exact questions where you don't have to tell
I
me
no,
who made
it's
it, who
fine.
built it, whatever the case is.
It's fine. No. That's what we're here for. Like the data is there. You just need to know where to look.
No, I want to ask you your decision criteria, right?
Yes,
Could
sure.
you pull up the example that you just had up with the Georgia property?
Maybe. Sure. This one. Is that what you're looking for?
Yeah, and if we look
Yep.
at the market context, so
Yeah,
there are
but this
25.
is incomplete in my opinion because I have a mistake here that I see, and it's that the minimum wage, market price, income needed room price. This is incomplete studio fair price because I don't know. I don't think this is the studio fair price for Stone Mountain. I think this is incomplete. There might be a mistake here. I want to double check. So
Okay.
so not sure if that's the correct number. I know it's correct for the previous one in Taylor, South Carolina, because we did all the many checks, and that's what I'm happy with. I know this might be a mistake. I want to triple check that that's the right number. How many
Sure.
houses are in the zip code?
Try one that you're comfortable with.
Oh, where do you live?
Let's do Rock Hill, South Carolina. That's
Rock?
close by to me.
Okay. Like this?
Rock Hill with a space. Rock space Hill.
Okay.
In South Carolina. Yeah.
Okay, that might be better. This is correct.
Okay. Yeah. So
Here you go.
let's see. 50,000 households.
No, 60,000. 58,000.
Okay, so 60,000 and 25% are renters, decent
Yeah.
income, studio, fair price, looks reasonable.
Yeah. Well,
Cool.
you say South Carolina?
Yeah, South
Perfect.
Carolina.
All right, there you go. Well, nice, great.
All right.
Okay.
So
Okay. Now
before
tell me.
we go look at the properties, I want to look at the demand.
Okay.
All right. If we go back to your thing, how much does the renter percentage matter to you? Like when you look at the population, how are you deciding, okay, this is a renter population where there's a lot of supply of rentals or a little bit of supply of rentals? The demand is great there or the demand is saturated?
we have several tools for that, and that also determines the price that we're talking for. So my webinar finished in 10 minutes, and I
Okay,
have 2 more things to go ahead. So I'm just gonna go back to my screen
gotcha.
and talk about something else. But if you really want to learn how things are run in my class, I invite you to come. I come. So not only every Friday, but that's why we discuss so many times about making sure you have the right decision, the right data, because everybody talk about shiny object syndrome, and everybody that talks about co-living says something like, no, your life is going to change, financial wealth, become, go, travel, and they put photos, in a jet with a Rolex, all that to me, respectfully, is baloney.
Yeah,
Because
I
it's
agree.
not, let me finish, because it's not real. It's not real. I'm not going to hire a job or whatever just to show that that's the life of a Coliving investor. Real estate investors don't look like that, don't work like that. That is just content. And that's why I'm starting a 90-day accelerator with everybody that wants to join me. Like the link is going to be below in the chat, to help you find the right first deal and put it in the contract before the end of the year. Or I will keep giving you my tools. I'll coach you for free until you do. Why? Because people either don't know how to do the numbers right. They don't know how to do the underwriting, which is what we're discussing right here. Or the finances is not complete or line up, like in the case that we were discussing before. And then we were able to help you until the help Janice here until she was able to really wrap these things. So we do, many people call analysis paralysis, distractions. The kids have a game and then I'm gonna go late and then I have to cook, or my wife needs me and I took another class, and then stock, and wasting months seeing people announce, oh, third property, fourth property, fifth property, and you were doing what? Share it, good for them. There's nothing happening. So if you are ready and you feel that you want to stop learning and you want to get going, right? If you are ready to take that step, just join my accelerator. Why? Because I'm not about giving you a class. Classes, you can find any class online. You can find classes for free all over the place. Like, what do you want to pay for a class? Are you going to say, no, you're going to pay for one, super, very simple. Private deal flow, done with you. I'm not going to hold your hand. We're going to do it all together from the beginning to the end, with the coaching, with the deal source that no one else is going to have, private deals, right? Financing access for all the lenders, everybody that I know, like Bree is also one of my students and she'll have access to my lenders, and the coaching. So you really can put a property under contract by Christmas. Fingers crossed. So what? We're going to have one wholesaler or one wholesaler team sourcing properties directly for my students. Plus, you have this tool that you like so much that you can have access to this lifetime license to accelerate your underwriting in minutes. And I'll explain you all how it is built, because it's going to be yours and you're going to have a license for this for life, right? You have weekly coaching review with me, accountability circles. We don't leave anyone behind. One-on-one calls with me, of course. I'll teach you how to raise capital. What is that you need to say, how to say it, how to structure the capital stack to present the deal to your investors and to your friends so you can actually get the money behind the deal. Why having a private wholesaler matters so much? Because you're going to have an unfair advantage. You're not going to go find a deal that everybody else has. Like, why is the point? Correct? You're going to have private deals only for you. So you can focus really in the numbers will work and execution. What is the execution? Finding the money, getting the capital stack, and getting going. If you want, I offer 2 more tiers. Another thing, and we're going to talk about in a minute, I give you the scripts on what to say to the lender, what to say to the partner, correct? And the list of the lenders that we're discussing here, list of primary money sources from the beginning to the end. If you don't have a partner and you want to have a partner, hey, how do we do this? JB, what is a JB? Everybody says JB. Okay, but how do you structure? And that's when everybody stops talking, because no one really knows, unless they pay really thousands of dollars in legal fees, which we already done. So those templates will be used. So access to my community, all the pitch decks, correct. So all the financing, everything else. And if you want to really accelerate, let me know, and I'll hire one private wholesaler just for you, right? And if you want to have access, number one, to all the deals first than everybody else. You go in the second tier, which is the master tier. And if you had more time with me, or you want to have more time with me, we do extra private coaching sessions. And that's why this package is only $17.99, and you can use the QR code to join. I will give you a QR code, a discount for $300 if you do this before the end of the Friday. And if you want to do a little bit more, then $37.99 or 3 payments on 12.88. Or if you want the wholesaler just for you, again, if you want to really accelerate this and no one else, like a wholesaler working for you, then that's an extra price. That's $6.99. The clock is ticking. Why is the clock ticking? Because what is that? October. Oh, it's October. If you really want to have your first property by Christmas, just join. Get a class with me. I hope that Juan put the link on the comments and the link of the accelerators right here. I really want to have you if you are ready. If your bank account, I don't need a big bank account. I need a big mentality. The willingness to do it and the seriousness to do it. Because if we were able, between everybody, to help a student that didn't have the partners for the equity and find the partners for the equity just with our mentorship, sky is the limit for everybody else. I feel very confident, my client Sarah/Janice, her case study is making the rounds and people is speaking really, really, really great about this case study. I'm very happy about that. And that proves that we can do it. And we can help her find a property that makes $6,000 a month. What say that this is not going to happen to you? So please join me. I think the link is like right here, but I'm going to put it in case it's not here. I'm going to put it right here in the comments again. If you don't have it, if you have any questions, please schedule a call with me. Happy to help you. Thanks for coming, everybody. Thank you. Bye.